Good morning. This is Robert Kaars Sijpesteijn bringing you this morning's market update. US stocks closed lower yesterday after a volatile day's trading, with uncertainty re-emerging over US monetary policy and the global economic health. Yellen yesterday somewhat stabilized the uncertainty of when a raise rate will take place, stating the recent shortfall in US inflation is largely a result of fleeting factors such as falling energy and import prices. The Federal Reserve Chair said, as she reiterated her expectation that the central bank will lift rates this year. While the Federal Open Market Committee is monitoring the risk of an overseas slowdown hitting US growth, it did not currently expect this to have a significant effect on the path for US monetary policy. However, she cautioned that Fed strategy would have to change if there were economic surprises. The US 500 lost 5 points yesterday, closing at 1,935.63. The US Tech 100 fell 8 points to close on 4,269.63, and the Wall Street dropped 27 points to close on 16,273. Gold rallied yesterday, adding $18 from the open to close at $1,150, and Brent crude saw a slight rise, improving 50 cents on the open to $48.30 a barrel. While most oil producers are slashing on expenses and postponing projects, Sasol is forging ahead with its largest ever project, an $8.9 billion investment in a US gas processing facility that can produce 1.55 million tons of ethylene. It's a bold move and a big bet on both the shale gas revolution and the US economy. Sasol's investment is in an ethane cracker, a facility where ethane is taken from shale gas and heated to crack its molecular bonds, turning it into ethylene for use in the chemical industry. To be cost-effective, it needs affordable supplies of ethane-rich gas, and thanks to shale extraction technologies in the US, prices have come down. Sasol is betting that they will remain low for some time. If it's right, its move stands to elevate the 65-year-old group to the upper ranks of the global chemicals industry. Although Sasol already has an international presence, with operations across 37 countries in North America, Europe, the Middle East, and Africa, it still relies on the South African market for more than 80% of its profits. However, if the cracker starts operating in 2018 as planned, Mr. Constable estimates that 30% of group profits will come from Louisiana by the end of the decade. This percentage would have been higher had Sasol not indefinitely delayed plans to build a $14 billion gas to liquids plant on the Gulf of Mexico coast because of lower oil prices. Still, while oil prices have fallen, chemicals have become a key driver of the group's performance in recent years, and about half of its profits is now derived from that sector. While Sasol presses ahead with further expansion, China has revealed it is sitting on an ocean of diesel fuel. The nation exported a record volume of fuel last month after already shipping unprecedented amounts of steel and aluminium overseas. The weakest economic growth since 1990 is sapping domestic demand for commodities, while refineries, mills, and smelters grapple with excess capacity after years of expansion. Exports of Chinese raw materials are exacerbating a global glut that drove prices to the lowest since the 2008 financial crisis and prompted steel and aluminium producers around the world to protest against the deluge. While diesel exports are principally at a risk to Asian refineries, the additional shipments threaten to worsen a glut that already extends from Singapore to Europe, and the US refining profits, or cracks, from making diesel in the Asian oil trading hub of Singapore have shrunk about 30% from a year ago, as exports from China, India, and the Middle East create an oversupply. China's August shipment of the fuel, also known as gas oil, surged 77% from a year earlier to a record 722,516 metric tons, or about 175,000 barrels a day. According to data released this week by General Administration of Customs, this is worrying news for an oversupplied market, followed with reports that exports may rise to as high as 250,000 barrels a day later this year. In Europe, Volkswagen's share price continued its rally this morning after embattled chief executive Martin Winterkorn resigned on Wednesday afternoon in the wake of the emissions cheating scandal. Winterkorn, who has been at the helm of the car giant since 2007, said he had been shocked by the scandal, but insisted he knew nothing about the misconduct. "I'm doing this in the interest of the company, even though I am not aware of any wrongdoing on my part," Winterkorn said. Despite the investors backing Winterkorn's decision to resign, the firm is not out of the woods yet, with Chicago law firm Clifford Law filing a class action lawsuit against the company over its detect devices, which enabled diesel vehicles made between 2009 and 2015 to pass tests. In the US, Volkswagen has been told to recall about 480,000 vehicles, but the car giant has admitted as many as 11 million vehicles were fitted with the device. Volkswagen is expected to face a criminal investigation in the US, as well as other probes in France, Germany and South Korea. The scandal has wiped billions off Volkswagen's value since the start of the week, although on Wednesday its share price closed up more than 5% and has continued that rise this morning. The Germany 30 yesterday fell slightly, knocking 44 points off the open to close on 9,570 spot 2. The UK 100 suffered the same fate as the mining sector suffered once again, with Goldman Sachs cutting its target price for BHP Billiton and Glencore while reiterating its sell rating on Rio Tinto and Anglo American. The UK 100 dropped 5 points to close on 6,026 spot 4. In other global news, Japan has fallen back into deflation for the first time since April 2013, in a symbolic blow to Prime Minister Shinzo Abe's economic stimulus. Headline prices, excluding fresh food, were down by 0.1% compared with a year ago in August, as slumping global energy prices outweighed stronger domestic inflation in Japan. The figures create a conundrum for the Bank of Japan. While it's encouraged by signs of inflation at home, the fall in headline prices risks creating the impression its policy has failed, especially given sluggish economic growth. That is leading to rising pressure on the Bank of Japan to ease monetary policy further when it updates its economic forecast at the end of October. In today's corporate news, Nike reported $1.2 billion in profits in 3 months ended in August, and Just Retirement and Partnership, two UK pension providers who are merging, are raising £150 million through share placings for the cost of the merger. Today's economic data in focus. At 9 a.m. we saw the release from EU of M3 money supply for August, as well as private loans released for August. At 1:30 in the US, we see gross domestic product price released for quarter 3, as well as core personal consumption expenditure for quarter 2. At 2:15, the Fed's Bullard will speak. And at 2:45, market services for PMI September are released, as well as market PMI composite for September is released. And finally, at 6:25 in the US, Fed's George speech will take place. That's all for this morning's market update. Thank you and goodbye.